Hey, what's going on, guys? I'm just going to hop on here real quick and review this Gamestop long setup that AlgoVision called. It was a CRT setup. So it's not going to plot this correctly because TradingView does not work in backtesting data. However, this would work live. The wick out, so you have your candle 1 right here, candle 2, CRT, 3 candle model, long setup, right, to the midpoint and the opposing end of this candle's range. Now if you look, on the 15-minute, you have this order block right here, created at a key time during market open yesterday on Monday. Key time, order block was made, closed above, so you got your long setup. You could have entered on candle 3, which you could have got a way better entry. See how the market opened right here and wicked this low? There was no close below that order block, right? No close below that. So your trade would have been valid unless if you got a close below there. So long setup moved about 3% now. And if you look, this was higher probability because there was also a lower time frame 4-hour CRT inside of the higher time frame daily CRT, right? So that would have been a higher probability setup, and you could have caught this long move right here with AlgoVision. And let's just show you one more time. There's the setup called. Midpoint and opposing end would be TPs. Alright, hey guys, I'm back. I just want to go over the results of this GameStop long. So, AlgoVision had called the daily CRT long setup. Don't worry about this right here because it would have gotten wicked out. However, we trade based off of close of candles, so this wick out would not have occurred. So here's candle 1, candle 2, candle 3. We went over on the first half of this video. You took an entry on candle 3. The open, 9:30 open on GameStop on Tuesday, open down here. So I would have been taking entries down here because it's better entry than the order block, which is somewhere in here, which I'll drop down to a lower time frame in a minute. So your stop loss would have been a close below this low on the 15-minute from Monday, TP opposing end or midpoint, and as you see, it was a 69 to 1 trade. Risk to reward wise, if you played a close below this, it would have been maybe a little bit less than that, probably like a 60 to 1. However, it was over a 10% move that we caught, and I did buy on my own personal account for 700 shares it was, and we made a nice little bag off of that. So this was a nice setup. High probability. You had this volume imbalance here supporting. See how these candles, this one barely closed below, this one respected that low of that volume imbalance. You have a bullish trend, so bullish move up. You had the daily CRT and a 4-hour CRT. Once it loads, you had a 4-hour CRT in here, right here, 1, 2. Enter off the third candle. So your entry could have been in here if you wanted to take this lower time frame CRT, but however, the daily did not confirm before the close of this candle. So right here would have been the entry candle. So opening price was way below your actual entry, so it would have been a much better trade to take. And as you see, the 9:30 open wicked this low and closed above, and it never returned. 9:30 was the low of the day, so this absolutely printed. All you had to do was just buy the third candle open, and it would have been a insane entry because this never even came down here again, right? So there was barely any drawdown. If you were trading off of the hard stop, you would have been stopped. However, we don't recommend that, as trading is very candle close base, and candle bodies tell the story while the wicks are what is caused to manipulate you. So you could have caught this move with AlgoVision. Again, let me just show you the setup one more time. Candle 1, candle 2, bullish setup, long entry on third candle open, TP at the opposing end of the range. So that would have been the setup, and I'll just go ahead and show you so you know the indicator would have had this, enable wick out. So see how exit up here, that's because I have the wick out now on, which is what the strategy is made for, to incorporate wick out, and take profit would have been at this candle's high. So you see the entry, exit price right there, right? So because there was no close below, the wick out now enabled shows you that this trade would have been taken and TP'd full at the first candle's high. So I hope you guys enjoyed, and if you want to check out AlgoVision, go to our website and start taking trades like this.